Hey everyone, so welcome to the Wealth Through Real Estate live weekly call. This call is our Q&A, live Q&A and live underwriting. So if you have any questions, now is the time to ask them. It could be anything, anything real estate investing, personal finance, whatever you have going on. For the real estate side, I'm a buy and hold investor. I raise money to buy my deals. I structure a lot of creative finance transactions. We just closed on a 7-unit property yesterday with 0% seller financing. We have 2 other properties under contract. One is 3.2% subject to deal with 0% seller financing, no payments for 18 months for the seller finance. The other one is a seller finance deal. I think that one's also 0% interest rate. Most of the time I'm not generating my own deals. I'm finding deals from wholesalers and I'm helping renegotiate them and making them much better. That's something I talk about quite frequently. And that starts with being able to analyze deals really well. Those 2, I'm buying an RV with no money out of pocket. I'm actually paying nothing for it. My knowledge in creative finance and my ability to buy real estate is allowing me to help someone else buy their first 3 deals. And that is going to cover the entire cost for this beautiful RV for my family and I to travel around the Pacific Northwest and head up to Montana for some awesome sub-2 events. What else do I have? I am helping Bird Dog, which is something I talk about. I say the best way to start your real estate investing if you have no money but have time is to either be a bird dog where you are finding deals for buyers with actual, deep pockets. You're finding them a real deal that they're willing to buy, which they will be willing to pay you fairly for. I'm going to make $60-ish thousand on this one deal alone, way more than anyone else involved with the transaction because I'm finding the perfect deal that solves the seller's problem and the buyer's problem and helping them, connect all the dots. So I make $60,000 on that for, a few hours of effort connecting with each party, structuring the deal. What else do we have going on? I'll leave it at that for now. So we got a lot of creative stuff going on, all types of creative stuff going on. But it's not all we do. I do, like I mentioned, personal finance, all types of real estate investing, raising capital. So who's got a question? Who needs help with their business, taking it to the next level, or maybe even getting your first deal, or just understanding the foundations of underwriting? Anyone? DJ, I know you got something, but it looks like you're busy.
All right, I do have a question for you, Michael.
Yes.
On the finance front, first of all, I just got my first deal under the escrow account open yesterday. So
Awesome.
excited about
Wholesale
that.
for the audience, wholesaler
Say again?
buy. First deal for you to, are you going to hold
It's a
that out or
Gator lend,
buy?
actually. It's
Oh,
a
Gator
lending
lending. Okay.
situation. Yeah.
Can you quickly explain what that means? What is Gator lending?
Well, I probably already used the term wrong, but so to be more clear on what I'm doing, it's a gap funding for a fix and flip home in my area.
Yeah, that's right. I call that gap funding as well. Not really Gator, but
Right.
when I think of Gator, and I think Gator includes everything now, but Gator, I think of earnest money deposit at
Yeah.
very high interest. 20+% interest, and even more often than not, they're looking for 40% interest, and they're funding the earnest money deposit for a wholesaler or a buyer. And the earnest money deposit is the money you put into the deal to basically solidify the contract. More often than not, it is non-refundable in our creative transactions because you are committing this amount of money. If you back out, you're going to pay that no matter what. What you mentioned, gap funding, like you said, there's a fix and flip. Is there, how are they buying it like cash, hard money loan, creatively? How are they paying for the majority of the loan? Because your gap funding is filling in the second position, right? Oh, DJ, can you hear me? Oh, it might be frozen. Okay, so typically you're going to pay the majority of your money for a fix and flip. You're going to get a hard money loan. You're going to raise the capital through someone else, whatever. You're going to raise the majority of the capital, usually 90% of the purchase price you're going to raise, or you're going to get a loan on, and then you're going to usually get 100% of the rehab also raised through, let's just say, a hard money lender. That's a common thing. 90% they'll fund and that of the purchase, and then 100% of the rehab, but you need to come through with that 10% as your down payment. You can use those funds to I don't know what I'm saying. So for that, you can raise the money to produce that 10% through a variety of means, and one of them is through gap funders. So if you really want to come zero money out of pocket, you can raise that money through a gap lender who will give you the money typically at 15 to 25% interest rate, sometimes lower, could be as low as 12%. And it's a shorter period because you're typically fix and flipping, or you're going to flip it and then do a cash out refinance to pay everyone back. So now that I gave a lot of extra context, DJ, for your situation, is there a first position loan and you're coming in with a second position? That's the gap you are funding?
Yeah, so there's a hard money lender on this, and then I'm essentially providing the funding for the rehab.
Okay, so is it 100% hard money loan on the purchase and you're bringing in the 100% for the rehab?
So it's kind of I shouldn't say unusual, but it's a little more nuanced than that. They kind of started the renovations and are fully through all the permitting and everything has been cleared. So it's a habitable space, but they needed additional money to finish things up. So like it's already appraised for 700,000 or something, which is more than the total borrow, even with my funding included. But they need to finish everything up to make it retail ready.
So they're flipping it, right? They're not burring it. They're not going to refinance it, and they're going to.
So it's being refinanced out
Oh,
of the initial hard money lender, and then I'm providing that additional funding
I see.
for the rest of the renovations. So it is a flip. It was already under process.
If you don't mind, can you tell us the terms of the loan?
For what I'm like, how it's structured.
Yeah, how long is your money left in the deal and what interest rate are you receiving, if you don't mind?
So I'm getting a full 20% return regardless of how long it's borrowed. And it's got to be sold in 120 days or I have a right to take the property over.
Okay, so 3 months. Wait, 4 months.
4 months.
4 months, 20%. So that's like 60% if you analyze it.
Correct.
If they do it sooner, it doesn't matter. Even better for you because your annual returns are even better.
Yeah.
Awesome. Okay.
I have a question.
Yeah, please. This is this is super live. You guys ask whatever you want, whenever you want.
Okay,
I'm
so
here to help.
first of all, nice to meet you all. My name is Felix. I live here in San Diego. Anyways, I wanted to ask you, so you have terms, and this is a question to DJ. You have terms of 4 months for the hard money loan, and your collateral is the property, just in case they're not paying on time. But what happens if like they need, let's say, an extra month or 2 months, or let's say they want to extend until the end of the year?
So first of all, I'm not the hard money on this. They have their own arrangement for the hard money. I don't know how long that loan is for.
You
But
should know that, DJ, because that's going to have a
Sure.
huge implication on you. But we can talk about that later.
Yeah, good point. So the property itself is secured in an LLC. So your question was about how it's secured. So we have an operating agreement that if they don't perform in that 120 days, on paper, I have the right to take over the property. Now, as the lender in that case, I'm not going to do that on the first overrun, if you will, of the time frame, but it's also got some communication requirements on the part of the borrower to make sure that we're hitting timetables. And if they don't do that, then I also have the right to take over the property.
Right.
Does that answer the question, or?
It's like half an answer. My question was, let's say they needed more than 120 days. So as I understood from your case, you have two lenders in the picture, right? You have the hard money lender and you have you.
Right.
Yep.
Okay,
So
so
let me highlight real fast. That's where DJ, his contract with them is for 120 days. DJ can choose to extend it if they communicate effectively with him. He'll give them an extension. However, this is where I said the hard money loan terms are really important, because if it's going to expire or balloon in 2 months or 3 months or 4 months or 5, like, you need to know when that's going to occur, because they're going to be the ones in first position. Who cares if you take over their position you
Yeah,
know,
'cause
the
then I
flip,
gotta pay.
then the hard money loan you can't perform on. But
Yeah,
knowing you, me knowing you in your situation, you would be able to, because there's enough equity, you would be able to muster the income to extend the hard money loan if you had to another 3 or 6 months and still get the deal done. Correct? That's your
Mhm.
backup plan if you had to take
Yeah.
over, even if the
Correct.
balloon for the hard money loan was sooner than yours or right after yours.
Correct.
Does that help, Felix, kind of explain the situation?
Yeah. And I have another question. You spoke about the gator lending, right? So we already know with the hard money lender, he has the collateral, he has the property. But
Mhm.
what's the collateral or the guarantee for the gator?
So for DJ, and correct me if I'm wrong, DJ will not necessarily take over ownership. If there was a foreclosure, the hard money lender would be the one to get the property. The agreement DJ has with the flippers is that he would take over their percentage of the ownership, right? He would take over the property and then he can execute what he needs to after the fact. That's his security. He will basically replace the flippers. Does that make sense?
He would replace the flippers and he
Yes.
will be together with the hard money lender.
Yes.
So I'd have to sort things out with the hard money. Yep. I
Right.
basically inherit a problem, but it's a $600,000 problem that I didn't pay that much for. So I'm willing to do
Right.
that.
Right. So he would come in because there's enough equity on this deal. He would come in and execute the rest of the plan, or even if he said, screw it, I'll try to sell it to someone else to finish it, which I wouldn't do because you never get nearly enough money selling a project in the middle.
Yeah.
I would just take it over and finish it out if there really is enough equity in your position. But then you need to work with a hard money lender. Yes, some of them are sharky and want the house because they know there's the equity, but more often than not, lenders are lenders. They want their returns. They don't want houses, especially partially finished houses. So you can communicate well with them and see if they'll let you finish the rest of the job. And because the LLC is probably the one getting the funding from the hard money lender, it would be easier because now you're just the one on the LLC, but it's still the LLC that they funded originally. Just the ownership of it is different.
Correct.
Hey, DJ, do you structure that through an operating agreement with the LLC?
Yes.
So what if you just loan the money, but you didn't create that LLC? Like you didn't go in with that LLC?
I don't have any security outside of that. Like it's not secured
you
against
have-
the property or anything.
So, I
So
mean,
it's really dependent on the LLC terms.
I've been told, and this is how I've been doing it. When you lend, you get the promissory note and you get the security deed.
But that's different. What you're
Oh,
talking about is a traditional type of private money loan.
Yeah,
In second
okay.
position or you're in first position.
Right.
This his security is whatever their contract says, that probably in the operating agreement or something. I don't even know. You probably might need a second agreement outside of the operating agreement. I don't know. But that you would take ownership of the LLC if they fail to perform. That's his security, that he will own the LLC that owns the property.
Oh.
Right? It's not that it's hey, if we have to foreclose, here's the note and it's secured by like it's different. He's really secured by the LLC in a sense, which owns the property, not really the.
There's no like I don't have to foreclose on them. It's in the operating agreement that at 120 days they would be ejected from the LLC. Like
But
I would inherit their ownership.
who would execute that? Who's like holding that document that would say, hey, I mean,
It goes to title.
so it's with title, right? You're not expecting them
Yes.
to do it in good faith because
No.
you know, they probably won't. I mean, they could, but they probably won't do it in good
Right.
faith.
No, they would not.
Yeah, because otherwise your hard money guy is probably going to be in first position on that if they end up taking it over.
They are in first position.
Yeah.
That's why DJ would do everything in his power to first ensure that the hard money loan balloon date is much further than his 120 balloon date. And any extensions he offers would have to be before the hard money loan ends. But typically you can pay a few percent, 1 to 3%, just depends on the terms. You can pay 1 to 3% to extend another 3 or 6 months with the hard money lender, typically because they don't want the house. They just want the loan they want you to satisfy the loan that you agree that you would satisfy more often than not. Some of them want the property and they're hoping you fail. Majority don't. They will allow you to extend, but you need to look at that contract to verify when does it balloon and what would it take to extend it if you needed to. But what's your question, DJ? I'm sorry. We've gone through
Oh, no problem. If this is helping other people, we
I
can
think it is. It's a
continue
good
to talk
discussion.
about it for
Right.
sure. I was actually going to ask you, because you had mentioned to me once before about HSA money. Did you have any people that are companies that do that right now? Because I'm
Health
looking
savings
to leverage
accounts?
that.
To
Yeah,
clarify? Okay.
so like self-directed.
Yeah, so you could roll over your health savings account into your self-directed, but in my opinion, the health savings, this is now we're getting to personal finance. In like the order of the best retirement accounts, it is your health savings account because it's triple tax advantaged. You don't pay taxes. You get tax deductions when you put the money in. You don't pay taxes on its growth as long as you use it on healthcare costs, but you also don't need to you also do not need to, you can save all the receipts and you don't need to pull the money out right away. You can pull the money out in the future. Like you spend
Yep.
$100 on, I don't know, the dentist or whatever, like the doctor, you save the receipt and then you pull the money out tax-free after it grows in 50 years. You can
Yep.
pull out. That's why it's so amazing. It's that, then your IRA, right? Because it's similar to your 401k, but you have total control over it, even though your amount you can contribute is much less per year than a 401k. And then your 401k, you know, and if should you go traditional or Roth, it depends. Are you trying to save taxes now or save taxes on the growth long term? That's the order of sequence. HSA to a self-directed IRA. I've never even thought of that because I'd rather just keep it in my HSA, keep accumulating healthcare costs, pay for it out of pocket, and then pull that money out tax-free in the future. But my 401ks or my IRAs, I'm down to roll those over, and I've rolled over my 401k into a self-directed IRA, which I then lend out on high, especially my Roth account. I lend out because it's all tax-free gains.
Okay, maybe I misunderstood when we spoke last, because I thought you were saying you had a company that would self-direct your HSA money and
I mean,
keep it
maybe
as
they
an
would.
HSA. Yeah,
Maybe they would. I don't know. I don't actually know. It probably was a misunderstanding. I probably just said I
Yeah.
love HSA or something.
yeah,
I do have a self-directed IRA company. Let me know and I can give you I can link you guys together.
Okay.
If you have 401ks or IRAs you want to roll into there, so then you can, you know, put it into any investment that you want, not just what is offered by your 401k or the brokerage you're using for your
Gotcha.
IRA.
I'm actually set up on the self-directed side for the IRA and 401k stuff, so I'm
Okay.
good there. But I guess if we're on the same subject, or if you don't mind another question on it, do you use infinite banking at all?
No.
Okay.
There's this
Thoughts
thing.
on it or opinions?
I don't have enough knowledge, but I say that because it's not something I'm feel the need to research heavily because there's this concept, the sniff test, or if it sounds too good to be true, it probably is. And the
Okay.
concept of getting an insurance policy that you're putting all your money into and you're getting all your money back to then whatever, the concept just seems absurd.
Yeah.
Like the way that it's articulated typically, and it's usually sold by
insurance
financial
company.
advisors or like those kinds of people. And usually
Yeah,
insurance salesmen are not the guys that I want to take financial advice from.
sure.
That's typically what it is. The only reason why I like the self-directed is because it's very obvious what it is, what my fees are. I don't like when the fees are hidden, when there's no fiduciary responsibility, when there's there's no fiduciary responsibility for a self-directed because we're the ones in control of it.
We're doing it.
But
Yeah,
when all the fees are hidden and they're making these crazy promises, I'm like, that's fine. Like I understand for my taxable brokerage, I put in $200,000. I can take between 40 to 60% out of that as a loan. I don't take the money out, but I get a loan against that. Right now it's around 7%. When interest rates were low, it was around 2%. That is logical to me. A HELOC is logical to me. When things are I have like the Warren Buffett approach where it's like buy companies that you like understand their business model. For me, it's similar. Like utilize things that like I understand. And I'm not in a place where I feel like I need to incorporate something.
don't worry about that.
You know,
Yeah.
it's like there's way more obvious ways to use money and to invest, in my opinion.
Fair enough.
That's what, all that being said, is that's why I haven't gone into it. Like EQRP, infinite banking, all that, like, whatever, not
Yeah.
even about it.
A follow-up question on that then is, since you said HELOC makes sense, it does make sense to me too. However, I know Pace was on a call recently where he said he'd rather just talk to a gator about it.
Yeah, cross
Because he doesn't
collateral.
have to go through the whole underwriting process. If I was interested in a HELOC, is that something you'd agree is probably a simpler route, if not
I
from
have
a,
leveraged HELOCs. I have leveraged HELOCs to buy more real estate with. When I was doing it and pulling the money out and locking it in, you could lock it in for certain periods of time, usually 5 or 10 years. That at that rate, it was around 5-ish%. Now it's closer to 10 to 12%. So that's up to you. Can you make more money than you're paying in interest? That's up to you ultimately.
Yeah.
I do like and you have to go through the whole process, right? Appraisal and, it's traditional finance. You have to go through that whole process, which,
Yeah.
that's up to you if you want to go through that. I don't anymore. What I also do is cross collateralize equity in one asset and structure deals. I structure loans out against my equity in an asset to do something else with. For example, we did that with the 7-unit we just closed. We just closed on Tuesday. Was that yesterday? Wow. We cross collateralized the equity in one property because this property was a 7-unit in Puerto Rico. They felt more comfortable collateralizing the equity we have on a beautiful property here in California as opposed to the one in Puerto Rico. Cool. I didn't care where the note, what the collateral was. So
Yeah.
it worked for us.
Makes sense.
And you can structure it however you want. That's the cool part. But you just have to find the person that's willing to do that. That's the hard part. Because that's a second position. That's the problem with HELOCs too. That's why they're more expensive. It's second position.
Yeah. So it's interesting you say that. Do you know anyone that does that? You said you can structure it however you want, and then you said, but you also have to find someone willing to do it. So,
right.
But I've got that airplane that's fully paid that I'd like to leverage towards buying properties. So if you know anyone with that, what's that?
That might be harder. You got to find a plane enthusiast who
Yeah.
if you fail, you got to give them, if you fail to perform, whatever they're going to get is worth it for them.
Right.
You got to find someone who wants that plane and is willing, if worst case scenario, right, you fail, you don't perform, they get that plane, that would be worth it for them. For me, it's easy with the assets that we have because they're all cash flowing assets and good to great markets. The one in San Diego is a phenomenal, huge property that people love to second, third, fifth. They don't care what position, because if there's enough equity, we've found that that one's a very viable property for something like that. But typically it's more transactional. Like we're not trying to keep people in multiple positions for too long.
Yeah.
Like that.
Makes sense.
So no, I don't know of anyone who would cross collateralize a plane, but you probably have a better idea of people who would than I do for that kind of thing.
To find some pilot lenders.
Yeah, you got some pilots who want your plane.
Yeah.
Cool.
All right. That's all I got for now.
Awesome. All right, who's got another question? I've got another 30 minutes, so I'm happy to answer whatever. As you know, the curriculum that I offer, I can screen share and walk you guys through this stuff. I'm going to improve the start here section. I'm going to make it much more help everyone get started. I got the, as you continue to engage with each other, like, comment, post, whatever, all that good stuff, unlocks more and more trainings for you. We have the traditional real estate investing, creative real estate investing. A lot of it is focused on underwriting itself. And then the live call recordings, which will all be included in here, like this one. That one's at the highest. I want to incentivize people to come in live, and the recordings is what they'll get access to once they engage enough. I want to put some more structure and actual step-by-steps in there. But as you can imagine, I'm also busy. So I want to do both, and I just want to connect with as many people as possible, get you all in there, help you on your journey. But I also need to know what you guys need help with. And that's what these Q&As are supposed to help me figure out as well.
Michael, I got a question.
Yeah, go for it.
In the beginning, you were talking about bird dogging that deal for a $60,000 piece. How did you structure that with the parties involved?
Actually, so let's go through that. So a bird dog, the best bird dog is going to do something very specifically where you are finding a deal specifically that caters to your buyer's needs. Your number one objective is to very detailed understand what is it that your buyer wants and needs, and where do they want to buy, how much do they want to pay, what types of properties, what are their exit strategies, what are their no-goes, like markets, let me see if I have some notes I could even reference. So like, yeah, what is their overall investing goal? How much are they willing to put down, either a dollar amount or a percentage of the entry, or a percentage entry to the total purchase price? What are their cash flow goals? You know, what exit strategy they're willing to do? How are they underwriting with property management, CapEx, maintenance? Like, what do they account for versus what you account for? Markets they're open to, the condition of the property, any other terms that they want. For example, you can only have this much, you know, a lot of these creative deals, when you add all of it together, how much negative equity would they potentially be walking into? What are their thoughts on a balloon, if they're open to it or not? What is their closing timeline? All that good stuff. So your goal to do that is to connect with real buyers that have either they have very specific criteria, or you're going to help them develop their very specific criteria. And then now you know what framework you need to accomplish to go and find them that exact property that they're looking for. If you can do that, right, and that's going to take then now finding deals. Either you're going to do your own lead gen, or you're going to find other people's deals and underwrite them and make sure that they hit that buyer's needs. If you can do that, then you can basically make your income through that connection, right? It's usually not your deal. It's not usually you're really just finding the specific deal that your buyer wants. And you have to make sure, if you're getting a buyer, you want to make sure typically that the buyer is not using other people's funds to finance the deal, because that will pretty much destroy all the returns, right, for them. If they need 12% interest, that will destroy it for them. You want to be able to find them the exact deal that they want, and then make sure it hits their financial requirements. And I would say the most important, well, we already talked about all of them, but you definitely want to understand how much are they willing to put into the deal. And then your objective is to negotiate with the seller and say, hey, I have buyers that are looking for this specific type of property, but it needs to get to these terms. The better you can negotiate the deal, the better you'll be rewarded for it. Let's say someone only has $50,000, let's say $50,000 all in to close on the property. If the down payment, all these other costs are $30,000, technically you can make up to $20,000, right? That's your spread to make on that deal. If the entry costs are $40,000, then your spread is $10,000. If it's $20,000, right? You're making money on that spread between what they're willing to pay and what fits within their buying criteria versus how you can negotiate the deal on their behalf. The better the deal you do, the more you get rewarded for it. So I was kind of giving more of a high level example, but the idea is know your buyer, right? Number one, know your buyer and exactly what they want. Because if you're confused and your buyer's confused, it's going to be really tough to find the right deal. Then negotiate, find sellers who have the deals that fit close to that criteria, and then negotiate like crazy, because the better you negotiate it, the more spread you'll get as you connect those two pieces.
So you're basically negotiating to the seller.
Yes.
For your spread.
Right.
Got it.
So it could even be like a JV thing where it's from another wholesaler and you say, hey, I think I have the right buyer. I want this amount of income on it. It could be that you find a seller directly and you say, hey, you know, I have a buyer. I need to get it to these terms. And the more you negotiate that, you'll make the money and that spread. So it could be basically as an assignment and JVing with someone who already has a deal locked up to your buyer, right? That's bird dogging. Or you're working directly with a seller and that's going to be better typically financially, to work directly with a seller to then structure the deal that hits their criteria. And the way you typically get paid as a bird dog is if someone's entry, like I said, is 50K, 100K, whatever, the lower you can reduce the entry from the seller, the more your profits are on that deal. And at the end of the day, no one can be upset about that, right? And I always make sure to ask, hey, buyer, if I find you this deal and it's under your 10% entry or whatever, and I talk to the seller, hey, I'm going to wholesale this to this guy. we don't want to get to the weeds with them, but I'm going to wholesale it to a buyer. If I'm able to get it at these terms, are you cool with it? And then the buyer, hey buyer, if I'm under your 10% entry that you're looking for, are you fine with me making my assignment? And usually they don't care, because if you're a good buyer, you understand your goal is to hit your buy box. Who cares who's the one making the money? As long as you're hitting your buy box, and all that work and knowledge that went into it is what allowed you to get an opportunity like that. So in my opinion, it's like everyone wins, because you're agreeing with the buyer up front. This is what you're looking for. Perfect. The seller, hey, I'm going to try to find you a buyer and I'm going to assign the deal to them. And then for you as the bird dog, you're putting a lot of time and effort in your knowledge, and you're going to arbitrage the difference between what the buyer is looking for and what the seller is willing to offer.
Gotcha. Cool.
You have to hit the other criteria. Really, you make your money on the equity spread, but you have to hit all the other criteria. Otherwise, why would the buyer buy it? So you're basically negotiating with the two parties and then connecting it all. More complicated, but that's why I say that is much better than just wholesaling. Because if you're wholesaling, you're just working with a seller to lock up a deal and then hopefully dispo it. But if you're bird dogging, you're really developing that skill set, especially underwriting. For me, it's like intentional connecting or intentionally wholesaling. You're just wholesaling the deal, very specific to your buyer, so you know that there's someone who wants to buy that deal. It's not a volume game, right? But that's why you make typically more money, more spread as a bird dog, because you're putting in the work of finding the perfect deal for the perfect person, right? So you make more money, as opposed to a volume game of wholesalers where they make, they might do 10 in the same time or 5 in the same time for 5 to 10,000 each. Very different model, but for me, it's way lower cost, way better skill set, because it's all foundational on analyzing deals and underwriting. That's my big thing, analyzing deals and underwriting. So the more you do of that, the more you develop those skills. Then imagine when you need to develop your own buy box, because you're going to go buy these deals. Now you've already developed the skill set to find, if you could find it for someone else, you can find it for yourself. And then you unlock capital raising. And now you're doing my business model. You're buying deals using other people's money. And your biggest skill set is understanding deal structure and handling the operations of getting the property through due diligence and closing, and then actually maintaining it and ensuring its financial success. That was a lot. I talk a lot, so hopefully
I'm taking notes, so it's awesome.
Good. Awesome. Akash, are you available for a minute or no? He may not be available.
Tell me, using your business model, what are the things that you have to be an expert
sorry, I
with?
was trying to get off mute. Sorry.
No worries. Are you comfortable talking a little bit about bird dogging in your experience, or no, not yet?
Yeah, I can absolutely.
I'll
Yes.
I'll answer your question after, Felix. Akash, I'm actually helping. I'm actually going to be bird dogging for Akash on looking for him for a specific deal. Do you want to give us a high level overview and what you're looking for and why you don't care about my assignment? You don't care, as long as I get you what you want. That's your goal.
Yeah.
But
Yeah.
maybe we can expand on it better, because it's obviously easy for me to communicate. It's different from the buyer side, and then I'd love to get the seller in after too.
Yeah, absolutely. So, just some background for the group. Me and my wife, we are in California. We are both in our W-2 jobs. We pay very heavy taxes. So the key thing for me to buy real estate is to look at how I can use the short-term rental loophole to negate some of those taxes. That's my first primary objective. And then my secondary objective is obviously, wealth creation for my daughter and, retirement planning. But most importantly, the way I define my requirements is that I have, let's say, 200K down payment available. Now that down payment is including everything, be it closing costs, be it assignment costs, etc., etc. The way I'm thinking about it is I need at least $2 million dollars worth of property to have a material impact in my taxes after doing cost seg. And the way I think about it is it's 10% of what I can pay down, which is 200K. What I do not care about is, how that 200K gets split up. My primary objective is that, let's say, when next year comes, I want to be hands off. So if I put it in a property management, that property has to at least break even, or if it doesn't break even, it shouldn't lose like thousands and thousands of dollars. It can lose possibly $500, $600 a month, but not beyond something like that, right? So I'm okay for it to lose, because in the long term, I'll gain appreciation, I'll gain taxes that I've gained in the first year and then the subsequent 4 years and so on. And then I'll not invest my time, and I'm creating an asset overall. What I'm looking at is markets which I'm comfortable with, where let's say property value does not depreciate quickly because of market downturn. So kind of like California, I'm in California, I trust California, even though I don't like a lot of policies about California, but the at least the property prices remains somewhat stable and appreciate. The other thing is property taxes, it doesn't go up significantly. And then there are a lot of small markets in California where, even long-term rentals are extremely good. So even if I get a long-term rental and don't have to deal with all the operational elements come next year, that's also fine by me. So for me, exit is not as important. It's just that the property does not have to be extremely cash flow negative, right? It has to be either neutral, or maybe if I lose something, then I can lose at least maybe three, four, $500 a month.
And
I bought it.
Can I highlight one thing? How much
Yeah.
time did we spend yesterday really, really deep diving into? So I'm going to make a template because I want to teach bird dogging, capital raising, connecting. I want to teach the overall business model, but pieces at a time. And I want to create a template for this for bird dogging because I don't think people do it as well as I do it. And I don't do it often. It's not really the highest. Well, it might work out well in this scenario, but it's not really the highest and best use of my time because I could just go buy millions of dollars. I mean, we're closing on 20 units alone this month, right? So that's kind of the best use of my time. But how much time do you think we spent yesterday really deep diving into this?
I think we spent
At least an hour?
90 minutes.
Yeah, an hour, hour and a half,
Yeah.
really deep diving deeply into exactly what Akash needs. And at the highest level, let me just highlight, he needs tax benefits from real estate. He needs some way to stop paying money to the IRS. At least federally. You can't do that in California, but at least federally. So he needs to take advantage. He cannot be a real estate professional, nor can his wife. They make a lot of money. They make a lot of W-2 income, which is not deducted. There's not much you can do to deduct that income. So for him, the best thing they can do is make more money in their jobs and then offset as much as they can in taxes. The one way they can do that through real estate is the short-term rental tax loophole, which would require them to, let me get the 3 criteria. And he verified with his CPA, which is always the right thing to do. They need to close on it before the end of the year, ideally October. They need to have, once they own the property, they need to make sure their average stay is 7 days or less, and they need at least 2 rentals of 7 days or less. And he needs to have material participation, which includes 100 hours of that. 100 hours working on the property and more than anyone else on the property. So that includes the setup fees, travel time, managing it, cleaning it, designing it, all that stuff. Yeah. That's what he needs to get the tax benefits. Then we reverse engineered. Okay, how much money do you have? How much tax benefits do you need? You need around, you have around 200,000, you need around $2 million of property to be able to depreciate a lot of your income. And you have around 200K to get into that. We said 2 to 250, but 200K to get into that, just including everything, closing costs, this, that, everything. So we kind of reverse engineered. He basically has a 10% entry is his max per deal. So now we know what is the most he can put into each deal, or overall. If I can get him a $2 million property, he'd put the whole 200. If I can get him $1 million property, he can put 100,000, right? That kind of makes sense. And then how quickly is he going to invest? And he needs the property ideally to not lose a bunch of money this year as a short-term rental. Even better if it makes money. And he has this because he has to self-manage it. He is already in communities to learn how to self-manage his short-term rentals. And it's pretty straightforward once you put the automations in place. And he doesn't really need to self-manage it for too long, just the remainder of the year. And then when he converts it to a different exit, midterm, long-term, or even short-term with a property manager, he wants it to not lose him a substantial amount of money. He is in a unique situation where he's able and willing to lose maybe at most up to $1,000 a month if it's completely passive for him. Because he'll save, if he loses $12,000 a year in cash flow, he's going to make hundreds of thousands of dollars a year in tax savings, right? So this is the right type of this is actually a great point. As a bird dog, you have to understand, who are you bird dogging for? Are you bird dogging for the guy that is looking for $70,000 affordable housing units? And, you know, it's like, well, where's your spread on that? It's better to find the right end buyer and then find them the right deal, as opposed to looking for the person that, it's like, it almost seems logical, right? If your money is made on the equity spread, the bigger the spread, the better it is for you. So I'll leave it at that. I don't know if you were going into anything else, Akash, but I think we really highlighted real life from the buyer side, from the bird dog side, and kind of how we went through it. Do you guys have any questions, any more questions about this? Aaron, I don't know if you had any more follow-up. We went, once again, real detailed into it, but really find your buyer, really deep dive into what they're looking for, find properties that could make sense, negotiate the hell out of them, make money on the spread between what they're willing to pay down versus what is required to enter the property. It's kind of 5 steps if you think of it that way.
Got it.
And I would say actually Akash is the perfect type of buyer, in the sense that he has a lot of income, he has money ready to go, and he is looking for a property. He's looking for bigger properties, right? Because that'll maximize his returns. So I'll probably put a list together. I'll sit there and think through what are other candidates for that, like that make a really good buyer. But those are the things you really want, not someone who has to raise the money from someone else, not have to, they're looking for really cheap properties that, you know, you could do the volume game and make a few thousand per deal. But the problem that you all probably see, even if you're not a buyer, is people are constantly messaging you terrible properties that are under contract and saying, hey, do you want to buy it? Do you want to buy it? Do you want to buy it? It's like, you're just wasting my time with noise on bad deals that no one else wants to buy. And you're just sending it to me. And I've already seen it. Like, what are you even doing? As opposed to doing it intentionally by meeting the buyer, understanding what they want, finding them the perfect deal, negotiating the hell out of it on their behalf, way better than a real estate agent could or would ever do, and then connecting all the dots. I'm also, in a sense, uniquely qualified because I've done so many deals where I can help them both on the transaction to ensure it's as smooth as possible, put the right transaction coordinator in place, do all of that. But that's an extra skill set. You don't need to do that because you just need a good TC. I'll get you a great TC if you're in that position, so that, you know, you can find the buyer, understand what they want, find the seller, negotiate, get the deal done. Yep, go for it, DJ.
I think that for me is the big takeaway here is, and I don't know how long you would say your experience was as bird dogging out of the gate, but like that really gives you that kind of background to be able to do some of the other things you do, is because you really understand the fundamentals on how the transaction works and what people are looking for. So even if, like you said, it's not the highest and best use of your time necessarily right now, I think the time you spent doing that helped you do the other things that are the highest use of your time now. Is that a fair takeaway from this, or?
100%. Yeah. Cause I didn't have this major learning curve because I was already learning along the way. Right. And then once everyone has the template of what kind of questions to ask buyers, they'll at least have a rough idea. And Akash and I built a relationship through this community. I mean, through another community, but then within school, he expressed me what he was looking for. So it's like what do they say? Like, if I tell you to look behind you and look for count the number of blue objects behind you, and then you turn around and you say, okay, there was like 5, and then ask you how many red objects were behind you, you're not even gonna know how many because you're only looking for blue objects. Once Akash told me his red object or what he was looking for, then when I saw different opportunities that may not work for me, but well, it could work for me, but would satisfy what he's looking for, that's when I decided, you know what, let's present it. It made it more, how do I phrase this? Because I was already knowing what he wants, it was easier to like connect it. But having the knowledge of deal analysis was how I verified. I mean, there's probably 20 deals that I looked at, underwrote, went through, including some that Akash brought, and thought, okay, this one actually is viable. And we're going to talk about it later today. And hopefully, get the deal done as soon as possible, satisfy the seller's problem, help Akash save a ton of money on taxes, and own a generational wealth asset in a coastal California community that has been fully renovated. Like, we went in the weeds. We talked about, like, he doesn't want anything to do with renovations. He wants it as turnkey as possible. But ideally, if it's unfurnished, because then he can spend time designing the property, finding the furnishings, all of that counts for material participation, furnishing the property. Now he has an excuse to drive there once or twice. All of that counts towards his 100 hours. We went really, really into it. it might be hard for someone to do without that knowledge, like you said, but you got to know what your buyer wants first and foremost. And then maybe you work your way up to the perfect buyer in this, like the perfect type of buyer in this scenario, and then structuring the perfect deal for them. Obviously, whatever my returns end up being on this transaction will probably be on the extreme end. And my timeline to do it is probably much quicker than most, but that's like saying, hey, I want to own 100 houses, or, my 60 property portfolio or whatever. It's like, yeah, but you got to get there with like one property at a time. Like you can't raise $1 million. So you raise, $10,000. You can't make a huge bird dog fee without, making a small bird dog fee. I mean, you might get lucky and the time might be quick, but it's another skill set to develop. Luckily, this skill set is much more transferable to the ultimate goal, in my opinion, which is to buy deals using other people's money, operate them better than anyone else can, right? That's my business model. And then I lend all of my personal funds to other people so they can do the same. That's the ultimate well-rounded, in my opinion, the ultimate well-rounded business model, because you're getting all the benefits and you're maximizing each of them, especially if you have money in a self-directed IRA and you're lending that out. Now it's all growing tax-free, 10, 12, 20, 40% at a time. I mean, it's insane. DJ, anything else?
Awesome. Thank you for that. Yeah, no, I appreciate you, man. That's very helpful. Thank you.
Any clarifying questions, guys? Like I said, the first thing I'm going to set up is a training for my lenders. Kind of what does it mean to be a lender on real estate transactions, right? Private money lender, private money partner. What's that process look like at a high level? And then I'm going to create a series I'm going to have a 2-part series on intentional connecting. First is capital raising capital and connecting that for other people's deals and making a fee on that, right? I pay people who raise capital on my behalf all the time. All the time I pay that. And the more credibility you have by having a trusted buyer, the easier it is, because if I raise this much, they will pay me for it if and when they use it. And then the next series is bird dogging, right? So it's now we went from raising capital to finding great deals, and then connecting all the dots is how we build towards, buying and raising capital for your own deals. But that's why those skills are way more transferable to that end goal of buying and holding real estate, as opposed to wholesaling, being an expert fix and flipper. You don't have to be an expert fix and flipper. You just have to be pretty good and get a bunch of quotes. Like you don't have to know every single intricacy of it. And I'm not trying to be Ryan Pineda or whatever and flip 70 properties at one time. I'm going to flip the properties that I need to. But when we're buying creative, more often than not, some of the best deals are little to no renovation. They just ended up in a situation in which traditional financing won't help them. Cool. What else, guys?
Yeah, I just wanted to ask you, you gave a model of, let me just remember, you gave some sort of a model of,
For bird dogging?
I think so. No, not bird dogging is.
To my business model.
Yeah.
Oh, you said what skills should you develop? I would say the foundational skill for everything and anything in real estate is how to analyze a deal.
Okay.
You need to be good at analyzing a deal, whether you're a buyer, a lender, a capital raiser, a connector, whether it's for deals or for money. You need to know what is a good deal and what is not a good deal. And you need to know, if it's not a good deal, what can you potentially change to make it a good deal, right? Like that is the foundational skill set, in my opinion, for everything. And then it's understanding how money works and how lending works in real estate. That's a little selfish, right? That's so I can more efficiently raise capital. That's for me. I'm going to do it anyway, but I'm going to share it with you guys. Or I'm going to share it at least with my intentional investor community. That's paid. Don't worry about that right now. That's a whole separate thing. But I'm going to try to share a lot of this learning lessons for you all. Then how to raise capital, right? Raising capital and connecting it to other people's deals. Why is that good? First, you're developing the best skill set. As Pace says, if you can go back, the one thing you would have focused on above everything else was raising money. If you can raise money, you can do anything. You can buy all the great deals if you have the money to do so.
When you say money, I imagine the guy that knocks on your door and tells you, "Hey, can you give me some money?" You know what I mean? Like,
yeah. So actually, I'm doing people a service. I am doing something that most people cannot. I'm giving them either double-digit returns on their money, 10+% returns on their money, backed by real estate, and it's secured and insured because the real estate. So it's secured, insured, whatever the third one is. I don't know. or I'm giving them ownership into a real estate investment with none of their own, they don't have to do any work. They've done the work by raising saving their money. They invest it with me. Either I give them 10+% interest rate, which most people are dying for. They would love that, as opposed to, and I know it's not like I hate stocks. I like stocks, but a lot of people do not like the volatility of stocks. They want something that is more stable, more guaranteed. You can't ever guarantee a return, but more guaranteed and secured. So that's why I'm literally doing a service for them by providing this opportunity. I'm giving them an opportunity to make double-digit returns or own real estate that they may never have been able to do so, because I've developed the skills to be able to do this and connect all the dots together.
And you also have I mean, you're not just raising capital, you also know what is a good deal and what's not a good deal. So that's also a skill that you have, and you have
Right.
confidence when you speak to somebody to ask for, his capital, because you're going to give him a good deal.
Right. Because I'm buying it. I don't as much lend. I don't raise money to lend on other people's deals unless I already know that's a good buyer, because there's too much risk involved in that, because I can't control the transaction after that. But what I can do is underwrite the deal, right? I can underwrite the deal and say, okay, these numbers do make sense. You can't verify the operators will be great just because the deal is great. But if you have experience with them as buyers already and capital raisers already, then you are more trusted to, you're more confident connecting money from someone else to someone else's deal. And that's where the easy on-ramp, right, is going to be raise money, use me as your credibility, say it's going to be for Michael or whoever, some buyer, right? For example, I'll say Coast to Coast Vets. We're going to raise money for Coast to Coast Vets. They've already bought 50+ rentals. They've already raised this much money. This is what they're typically offering. These are all the people they've already paid out. So then when you have the money and you have the credibility, now you're just connecting the dots, and you're going to make money off that transaction. And you learn along that process, what types of deals are the buyers buying? What returns are they offering? That's another huge value add of being a capital connector, is you're also learning the deals people are buying, what returns are they looking for themselves as the buyer, what are they offering to their lenders? Those are all micro skills. Like, I've given you like big skills that we talked about. There's micro skills underneath each of those. And I want to create like this crazy thing. I just don't have the time to sit there and draw it out right now. Maybe tomorrow on 4th of July, but to create like the major skills and the micro skills underneath each of them. And there's so much overlap for the way that I do things, because that's why I stopped wholesaling. It doesn't do me a lot of good to sit there and negotiate with the seller up front without even knowing my buyers. Underwriting doesn't really matter when you're wholesaling deals, as you've seen, because people are putting terrible deals on the market. They're just hoping someone buys it. They're developing buyers lists. All that is volume, not skill. I care more about skill than volume. So that's why my business and the way that I do things is in full alignment with that.
Just out of curiosity, somebody that is trying to do the same model you have, and I know it took you like a lot of years, and today you're a professional, but somebody like me, for example, that have a little bit of experience, buying here and there, selling, doing a little bit of wholesaling, how much time do you think it will take me to get maybe to half of your skills, or doing half of the volume of the deals that you make, for example, and basically having full time in real estate?
I'm still not full-time in real estate, ironically enough, but that's neither here nor there. Not that I couldn't, I just really enjoy what I do. What I will say is I can't tell you that, because it's going to depend on how long you're willing to work and how, like, people really trust me right away because I'm an engineer by trade. And I already started investing in real estate traditionally, starting in 2020. I was house hacking. I was analyzing. I analyzed over 100 deals before I bought my first one. So I was already thinking with that mindset. Then I did another 4-unit the same way. I taught myself how to wholesale out of state, was wholesaling cash deals out of state that people were going to buy and then burr them after. So they were going to get all their money back and make money after. So I spent a lot of time, money, and energy to developing my skill sets. What I'm offering people is a more streamlined way to do so. That's what my intentional investor community is going to be. It is full transparency. It's going to be paid. It's going to be a higher ticket item. It's going to be literally hand-holding you to developing this business model. We're going to skip a lot of the steps to get you to, like, you're not going to need to be a bird dog and capitalize for other people's deals. You're just going to do it for yourself. But that is what I'll be offering in the future like I said, don't worry about that, guys. That's really if you want to just do what I'm doing as quickly as possible. But the timeline, it depends on how long you're willing to work, how good you are with things. People, I'm an engineer. People think that means I'm phenomenal at math, and I am phenomenal at math. But like the math that we're doing for deals is not that crazy. It's just understanding concepts in the bigger picture is where it really plays in. And that's why developing those micro skills, that journey that I talked about of capital raising, connecting, bird dogging, and then connecting all the dots for yourself, and then learning how to operate, be a leader or a business owner as you really scale your buy and hold business. Like I can't tell you, I've gotten to 50 plus units in 4 years, but people have been in real estate and have 2 or whatever, I don't know. I only have my own experience, and it's 50 plus rentals, 15 million plus portfolio and since May of 2020. So like, I don't know. I started learning in 2018, Bigger Pockets podcast and underwriting deals, because I underwrote over 100 deals before I bought my first one, because it was going to be such a home run. And I was going to live rent free and make money and then make over $1,000 once I moved out. And I was walking into equity. It was like perfect. So, but it wasn't because I just took action while everyone else stopped during COVID. So, and interest rates were low. That helped too. So hopefully that, like, it depends. I don't know. That's my lawyer answer.
Thanks.
My goal is just to make it as quick as possible if you take advantage of what is available to you. All right, guys. Anything else? We can just like do a little wrap up right now. If anyone has
Michael,
any.
did you buy that first one creatively, or was that a conventional deal?
Nope. So my journey was very straightforward. I house hacked a duplex using my VA loan. Then I started doing wholesaling cash deals in Huntsville, Alabama, because I was up in Fairbanks, Alaska, right? I didn't want to deal with, there wasn't a lot of buyers. I didn't want to walk around in the winter and the snow and all that. I didn't want to deal with all that. So I just said, I might as well just go virtual if I'm not gonna go to these houses anyway. So I started wholesaling cash deals in Huntsville, Alabama. A year after buying my first deal, I bought another 4-unit, house hacking that with my FHA loan. Continued wholesaling cash deals. And then I was at the same time learning more about seller financing, creative finance, not sub 2, but just creative financing, seller financing, working with title companies and leveraging tools like PropStream to find tired landlords, writing and sending them letters. My wife and I wrote over 250 letters, sent them out to owners of multifamily properties that have owned them for over 10 years, potentially good candidates for seller financing. We ended up getting 20 like in-person meetings and all that. And then I met with one person who actually didn't want to sell his duplex, but had 20 rental cabins. I thought, what the hell? I've never even thought of this. I was underwriting wrote that. It was very different for me. Underwrote it, verified it with other owners of similar assets, and realized, oh my God, I don't need to worry about these other 20. Between my 2-unit and my 4-unit, if I add this 20-unit, I'm going to be able to cash flow more than enough to be financially free for the rest of my life. So I went all in on that, dropped everything else and went all in on that. And then I learned that I can be more creative, and was able to actually get into the deal with zero money out of pocket, doing something we call the Morby method, or simply it's a seller carryback with a commercial or with a loan in place. Then you do a seller carryback for your entry costs, right? So you come in with no money out of pocket, but the property has to cash flow a lot for you to be able to do that. I was done with real estate investing. I was retired. I got out of the military. I said, cool, I'm done. Got a little depressed, got a little bored, saw half of one video by Pace Morby, sub 2, felt his energy, felt who he was. And it was a Morby method one. I said, holy crap, there's a whole community of people doing the exact thing that I had to figure out on my own. So I was already doing creative. I was figuring out on my own, realized, wait a minute, I get to learn from someone else who's already doing it way better. Invested the money, in my opinion, is like the best money I've ever spent, more than just creative financing and all that stuff. Like that's whatever. There's so many other non-monetary benefits to it that I advise everyone, if you have the money, go join it. And just learned a lot through there, and just continue buying real estate, really started raising capital. At that point, really started being more knowledgeable about sub 2, which was perfect timing because end of 2022, the market started shifting. So great candidate for, low entry sub 2 deals, seller finance deals, really changed the way that I was already trying to solve the seller's problem. But the more and more I learned that, all I am doing is solving the seller's problem. If I can solve it and I make money, then I buy it. If not, well, then, you know, it doesn't work. But once I took that pressure off and then started partnering with people, it took me to the next level because now it was more fun again. And I just got more inspired. I was more passionate. It was more fun. So I just continued going that route. That's my journey. And I just continue. And then at that point, after sub 2, I bought maybe before sub 2. Well, I also house hacked a 3 unit in San Diego. So I bought maybe a little over 3 million before sub 2. And then I bought, you know, 12 plus million since in 18 months because of all those skills that I developed over time, right? It's not just sub 2. People see my journey in sub 2 and say, hey, I wish I could buy $12 million of real estate in 18 months of joining. Well, yeah, but there's also all that other information, all that other skills that I developed beforehand. I'm inherently really good at math and talking to people. So like all those things, well, I think I'm good at talking to people. I don't know. I usually talk around them because I talk so fast, but all those things made it that much easier for me to scale my business and my buy and hold business. But part of it was just partnering with people and being inspired about what I was doing again. And now helping other people is my biggest thing. I will not stop buying real estate the way that I'm doing it because I would never pay someone to learn, or I would never learn from someone who isn't doing the thing that I want to do. I have more than enough real estate. I'll continue buying it because it's really fun. But my goal now is to help other people achieve financial freedom. And these are the ways that I can do so, is to expedite other people's journey to what I've been able to do. Because, you know, I can't tell them how to do it another way. I can just tell them to do it the way that I've done it and what's worked out for me. If they like it, it works. If not, it's all right. There's other people to learn from. So that is my journey as a whole and kind of what stage I'm in now.
That's phenomenal. Thanks for sharing.
Yeah, of course. I've learned the more I share it, the better it is, because it really gives people a better understanding of what is possible in 4 years, but also like what the whole journey looks like. Because I've been working hard very hard since 2018, not just my job, not just renovating and doing all my own properties and all that stuff, but then building out this whole business. I mean, I work a lot, but I also, at this point, is a lot of lifestyle design as well. And like doing the things I care about the most and within the time frames that I enjoy. So I got a baby girl, so I really am adamant about making sure there's solid time with my family. So
Cool.
yep. Yes, sir. All right, y'all. We good?
Good.
All right, everyone. Thank you. Oh, wait, there was a
Thank you,
comment.
Michael.
Structuring negotiating deals is big too, isn't it? Yeah, structuring and negotiating deals. I include that in underwriting and deal analysis. I think the best way to analyze and negotiate it, the best way to negotiate a deal is to go based on the analysis. And if I have to tell a seller, hey, I don't buy real estate unless I can pay a lender and make 10% or more cash on cash return or whatever your criteria is, this is the only way I can get there. Either that works for you or that doesn't. And then when I'm negotiating with them, I'm not negotiating on, and I have a whole video I'll put in here about this. This is the one I kind of speak on, how, some of the cool ways that I buy deals and negotiate. Sometimes reducing the purchase price by $50,000 is going to piss off the seller. And it's not really going to change your returns that much, because if it's not affecting the down payment, it's going to do is reduce your monthly payment, let's say by a little bit, potentially. But what would be better if it's seller finance, instead of dropping it 50,000, going from 5% to 0% is going to give you way better cash flow, way higher cash on cash return. So it's like really knowing what to negotiate is a big part too. People burn all the dumbest bridges, usually purchase price, when there's way better ways to we closed a 7 units at 0%, and we've got 2 other deals right now under contract at 0% interest rate, because I understand what makes a deal make way more sense. And then the debt pay down every month. Not only is it going to give you more cash flow, but now every single month, if I'm paying $2,000 on the debt, I'm paying $2,000 directly. It's like into my bank account, basically. I'm putting $2,000 into my bank account to my net worth every month. That is insane, instead of wasting money on interest. So knowing what to negotiate on based on solid deal analysis is the best way to negotiate. Because if it doesn't work, who gives a shit? Move on to the next one. If it does work, awesome. You got a great deal and you solved the seller's problem. I'm glad you asked that question, because then I got to hit that one too.
What software, real quick, were you using when you started sending out the letters, the tired landlord letters? Is that
For drafting
PropStream?
letters or finding the tired landlords?
Finding the tired landlords.
It was PropStream. If you're going to use PropStream, let me send you the link. I am like a partner with them, and it'll give you like a free trial and all that good stuff. Actually, I'm also not Benson. That's the other one. Burton, because their names are so similar, Burton, we're gonna do a series together on how to find different deals, like my favorite seller finance list, my favorite low equity list, my favorite, you know, how I filter through expired listings, all that good stuff, skip trace, all that on there. If you want the link, well, this won't be in this recording, but just let me know and I'll get you it, and it gives you like a free trial and all that, at least just to play around with it and try it out.
Okay, cool.
Cool. All right, y'all.
Thank you. See ya.
Sorry, I know it's the end now, so bye, everyone.
Thanks, Michael.
And recording will be, once you unlock level 6, you'll get this recording, so enjoy it later. Bye, guys.
Cool. Thank you.